Welcome back. Let's get in another management. Luxury watch retailer Ethos is buzzing in trade today after a strong quarter. The company has reported its highest ever EBITDA revenue as well as profit numbers for a quarter. Yashovardhan Saboo, who's the founder and chairman of the company, joins us now. Thanks a lot, Mr. Saboo. Always a pleasure speaking with you. And it's been a good first half of this year, almost 57% in terms of revenue growth. Absolute numbers as well as have been strong. The important part is that the second half of this year, which includes the third quarter, which is the biggest one for you, is still upon us and it's still underway. You had earlier given us a guidance of 30 to 35% in terms of annual revenue growth. Wanted to know that, after you've seen a significant part of the festive season, do you want to up your guidance? I mean, how was the third quarter and what are you confident of ending this year with now?
I have to be careful not to get very excited.
Yeah.
We're very happy with the results. They're better than what we expected. Despite the fact that globally there are some headwinds in the business, but Indian market still remains very, very strong. We're seeing a very good third quarter go ahead. So, but we might get some delays in the opening of new stores, which were in the last, in quarter two. So I'm still very, very confident of keeping our earlier guidance, which is 30 to 35% growth.
Okay, all right. Hi, Mr. Saboo. This is Nigel now. Could you tell us exclusive brands as a percentage of sales? What was it? I think it was around 25, 26%. If you could give us a sense out there. And the last time you told us about pre-owned sales, that could hit around 75 crores. You want to stick to that number, or is there upside there?
Let me talk about exclusive brands. So exclusive brand sales has gone up now to about 28, 29% in the last quarter. Sometimes it just varies a little bit depending on the availability of products. In the last 2 years, there's generally been a shortage of products across various brands. That's now easing out. But we expect the percentage of business in exclusive brands to continue to grow. And we expect it to reach about 35 to 38% over the next couple of years. So that's a happy story. We're seeing growth along expected lines. Okay. There are more exclusive brands that are under discussion, and that portfolio should be expanding in the months and quarters to come. As far as the business of pre-owned watches is concerned, I don't think there's going to be a growth above 75 crores. There are two reasons. I think worldwide, there has been a slowing down in the business of pre-owned watches. A lot of it was fueled in the US and countries that were going very well. There has been a slowdown. So in India, the market still remains good. There is our big bottleneck is still the availability of watchmakers to refurbish the watches, and we don't sell any watches without proper refurbishment. These are very special skills. We've been hiring watchmakers. We've been sending them, some of them as we speak now, they are out in Switzerland getting specialized training. But this growth in this capacity is going to take time. So I think growth is going to be steady, but it's not going to be like meteoric.
Right. Mr. Saboo, I'm going back to my first question with regards to your annual revenue, and that's primarily because last year you did 577 crores. If you do about 35% as you're guiding this year, it would be around 780 odd crores. The first half of this year itself, you've done 350 crores. And usually the second half, you do a good 30 to 40% more than the first half. So, I mean, if I just look at it numerically, you should easily cross around 800 to 850 crores in terms of revenues this year, right?
Well, it's not 40% more. Historically, the first two quarters, they account for about 44 to 45% of our annual sales. But again, there are variations there, depending on exactly when the wedding season starts and so on, whether it's, when Shraddha ends and so on. So, and we do expect a certain softening in the final quarter of the year. Okay. We are still a little conservative. But despite that, we are pretty much confident of this 30 to 35% guidance that we are giving.
Right. And did you close two stores during the quarter? I mean, because I looked at your previous presentation, it said you have 50 stores, and the current presentation says 48 stores, while you were looking to open about 8 to 9 stores this year. How many have you opened so far? Can you give us a sense? Because you said there was some delay in store opening.
Yeah, unfortunately, we haven't opened any stores in this year. There were supposed to be a few opening, specifically Indore was supposed to, 2 stores in Indore were supposed to open. And many of the mall openings, these are all new mall stores, they've been delayed for some reason or the other. And we're sort of helpless in that. But we still are gunning for about 9 stores opening in the final quarter of the year. Sorry, 1 of them will open in the current quarter and about 8 in the final quarter of the year. So we're not going to see their contribution to revenue this year, but it certainly gives us a big boost for the following year. Apart from that, we are actually upping a lot of our growth. So the number of stores that we're going to be opening next year is going to be much higher than what we had planned at the time of the prospectus. So, and the IPO. So we intend to accelerate growth going forward.
All right. You're talking about the product mix changing towards the premium category. I think the average sales price was around 1.53 odd, if I remember correctly, per unit. Where do you see that number headed? What's the outlook out there?
Yeah, it was about 1.53. 4 years ago, it was exactly half.
Oh,
So it has evolved very steadily. We still expect it to go up. However, not as steeply as it has gone in the past. A lot of the reason for the past has been that we have decreased our presence in the markets above or the price point below 30,000 rupees and increased it in the price point above 3 lakhs and 5 lakhs. While that trend will still continue and the growth will be pretty high, but it's not going to be as high as before. We expect it to get to about 1.8 to 2 lakhs in the next 18 to 24 months.
All right, 1.8 to 2 lakhs in the next 18 to 24 months. And by you removing yourself from the sub 30,000 place, you have you've alienated both Nigel and me out here, Mr. Saboo, because I don't think
we have got eliminated, sir, from your target audience. Unfortunately,
no, I would love to introduce you to some of the watches which are not only great to wear but are also they hold value.
Right.
They are investments to make.
Okay, I can tell you one thing, Mr. Saboo. While we might not be as interested in the watch business and the high-ticket items out there, you have non-watch business as well. You have, the luxury baggages and you have the luxury jewelry, etc., which is just seeding right now. Just wanted to understand how big can that be, say, in FY24 and thereafter?
So let me talk. The luxury business is extremely interesting, but I don't think it's going to be very large in terms of size. The brand that we signed on, Rimowa, is the world's top brand for luggage. And we're very glad, and I think it's going to be growing steadily. However, we're not going to see it move the needle for the company in 24, but by 25, 26, it will start to have an impact. The other business, which is jewelry, and we've signed on Messica Paris. We haven't started the business. We've just got in the first goods now. We will see it going on.
Okay.
I'm a strong believer in the growth of the branded jewelry business in India. And we will be investing more and more in that field. And over the next 3 to 4 years, it's going to become a strong pillar for future growth.
How much will you invest, sir?
No, we haven't really put numbers to it. I'm saying investment in terms of effort and time.
Okay.
And whatever the money is needed. We need to learn this business and the international branded jewelry business.
Yeah.
It's on a start, but it's going to pick up speed just the way luxury watches did about 10 or 12 years ago.
Okay, all right.
We're on that threshold.
Okay.
Nigel, speaking about effort and time, when you have a 3 lakh plus rupee watch, you have made all the efforts in your life and you now are probably having a lot of time on your hands as well. Expensive time, so to say.
I've got a long way to go, Mr. Saboo, but thanks so much for joining in, giving us clarity about your vision going ahead. For the time being, the street likes what you're saying. The street has liked the numbers. The crucial part is, how will the second half of the year pan out? Thanks so much for stopping by.
Right.
Well, on that note, though, we'll slip in a short break. You come back, we'll update you on how the markets are faring.